to tell you that beyond investing, because that's the main agenda of the day, I am very proud to be a representative of Kenyans. I'm actually just from appearing before a committee of parliament in terms of processing my proposals to see how we can intervene as parliament to lower the fuel prices. Secondly, as a member of parliament, you know we oversight NGCDF, and I want to report to you as my bosses that in Kiharu, it's a rural constituency, actually one of the largest, and all our public primary schools, all classes in all public primary schools in a rural constituency, they are actually all tiled. You know, based on the kind of question I had from Madam Denya, she's asking, what's the big deal about tiles in a school? Because maybe she was in a Nairobi academy. It's a very big deal in a rural constituency, and I'm very proud about that. And of course, beyond improvement of other infrastructures. The second thing is that we run a program we call Kiharu Masomo Bora, where all our 65-day secondary schools, covering over 12,000 learners, we have been able to work on a model where school fees is only 500 shillings per term. And learners eat in school from Monday to Saturday. And the last Friday of the month, including today, they actually take chapati over lunch. And that is beyond doing what we also need to do in terms of making sure we have laboratories, we have revision materials, and all the others. Now, I want to be very quick and fast so that I don't give you my stories. I also take time to answer your specifics, because I may take for an hour, but I'm addressing one table. But Q&A helps you to diversify your speech in terms of what the people are looking to gain from your presentation. I'm happy to see my friends here, many of you, Minette team led by Mainga, and all of you. In fact, I've been looking at all these banners here as a person who really loves investing. Really. I mean, when I am stressed, I read Forbes magazine. And when I'm stressed more, I read Fortune. And seeing all the companies represented here, it's my hope that I can be able to buy a stake in each of them. From Sanlam, I joined Patrice Motsepe there, to SIB, to ABSA, Abojani, and all of these companies, including our host. It's lovely to see companies, corporates, displaying in this kind of display. I know the reason you called me Mercy. I know it's because of Kenya Power. And number two, because of KQ, because you covered it in your business daily. And I just want to highlight, because listening here, and I'm very glad that I got some presentations going on, is that you have had time for many people to talk about many things. So I'll not come here to talk about investing in terms of a fund or globally. Globally meaning as an investment company. I try to individualize investments because there are more qualified people to talk about the other alternatives. So in my brief speech, if I say anything against your company, I don't mean it's bad or what you do. It means that we came to share diverse ideas. That you shared your idea, I share mine, because we are looking for different audiences and different house, as the SLA put it. So what do we do when we are investing? What do we look for? Obvious. From the village, as Kamau put it, your father does not believe you made it before you have land and before you have a file of titles. So when you go home over Christmas with a file of title deeds, then your father knows he has a son. If you go with things called shares and crypto, he has a son, yes, but there is room for improvement. So there is land and everything associated with land. And what I'm giving is my reasoning, so it may be different from many others. The second thing we look at is anything fixed income. And I highlight two to represent all the others. Fixing money in the bank, like the one we presented here, or the obvious T-bills and bonds, government instruments. Because I am assured of my return, it's fixed. Somebody is dealing with the risks. Me, we wrote an agreement. What we wrote about, I'm assured. The third thing is my pet, investing in companies. I'll highlight three to represent all the others, because all the others is an accumulation of those. If you put up a fund that purchases equities, so I don't want to go to that. I want to highlight the specifics. So the third one is the equities. Equities is shares and buying companies. And as you know, I'm a proponent of that more than the other two. More than the other two because investments is about timing. When am I investing? Myself, I may not be a proponent of land, but I've made money in land in the past. I have made multiples in 2 years by just buying a piece of land. So I could be the last person to talk anything bad about land and real estate. But that is then. It is a decade ago, just when I left KU for my undergrad. Around that time, land was hot, and it was actually hot. We made money. Is that the case now? You tell me, because you have land. Try to sell it, and then we compare notes. And don't tell me about the value of your land. Tell me about the offers, credible ones. Because there's a whole difference between what you think your land is worth and what you can actually receive from a person who can actually buy it, not the one who thinks they can buy it. The second thing, both and fixing money is both sides of the same coin. Because both are lendings. Both are debts. Lending, fixing money in the bank, you are lending money to that bank. They actually compare it. Your deposits, they take it as a liability, not as an asset. Because you have umekopesha, benki pesa. The other one of T-bills and bonds, you have given your money to government for a predetermined rate. So you are lending money to government. So both are the same. It is lending. And you only lend money when the other person has better use for it. It means when you are lending money to the bank through fixing it, and you are lending money to the bank through buying T-bills and bonds, you have admitted that those two institutions have better use for your money than yourself. So, that is the case. The third one is buying companies. But before I go there, because I'll be pretty short as I said, this issue of lending money to these two institutions, fixing and also buy T-bills and bonds, there is one fallacy that I want to dissuade us from. Fallacy of government never defaults. Government will always pay me my money because it's government. Yes. Because possibly in your investment lifetime, it has never happened. But remember, all the things that take too long to happen, when they happen, they actually happen. So, I'm here as a Kenyan in a country where we have 13 trillion in debt, national debt. Because those T-bills are what I'm talking about. Don't think I'm deviating from the speech. You might think, oh, he has now started those economics. No, I'm still on your boats and T-bills. Because the accumulation of those are the ones we call national debt. So it is 13 trillion. 60% of that is your money. That is domestic borrowing. And they happen majorly in those two elements. 80% of that 60% is domestic debt. 80% of our domestic debt is owed to financial institutions. 80%. Households, who are me and you, is, I think, around 3% or thereabout. NGOs around 1%. So we go back to the default setting. That's what I want us to analyze together, because that's what we are doing here. So we are at 13 trillion because for the last 4 years we have borrowed more than 4 trillion. That's the reason why we are there. It's because for the last time from 2022, we have actually borrowed close to 4.5 trillion. So 2002, debt is 600 billion. 10 years Kibaki goes, debt becomes 1.7, 1.8 trillion. So he borrows 1.2 trillion in net terms. But the revenue grows by 5 times, from 200 billion to 1 trillion. There's a reason I'm saying that. Then from 2013, our debt grows from 1.7, 1.8 trillion to 8.7 trillion. So in 10 years, we borrow 7 trillion. Our revenues in the same period grows from 1 trillion to 2. So the debt triples, more than triples, but the revenue doubles. So you can tell now, in that pace, who is actually a Kenyan Maradona and others. In that Boston Marathon, you can tell who is a Kenyan. The Kenyan there is the debt. A normal Maradona is the revenue. So the Kenya is way ahead. The other Maradonas are way behind in terms of the growth. So we are in 2022. Marathon is continuing. Debt grows from 8.7 trillion. We are now even not yet done with the first half, with 5 years. With 5 years. We are not done with 5 years. The debt is now 13 trillion. So we are in a race to borrow in 10 years. We are in a race to borrow in 5 years what we borrowed in 5 years, the previous government, what we borrowed in 10 years in the previous government, and now we are borrowing in a year what Kibaki borrowed in 10 years. Now, so, at the line here, because that is we are still in boards. In your boards. We are still in your investments. So, the debt has grown from 8.7 to the interest rate alone, domestic. So out of 100, we will be spending, if you include principal, 90 shillings out of 100 to service debt. So to wrap up that story, so that I finish up with shares, that story is about Kenya, but you as an investor, you need to very fast find a friend from Ghana. Get a friend from Ghana and have a call after this session. And then recap the story I've given. It is definite. It's so definite. If we do not change course, what we think is a solid rock will soon disintegrate. Because how is that going to survive? How? So I am foreseeing in the future, not very long future, a boardroom like this. The person who will be studying here is government. Not Ndindi Nyoro. Government. Have government as a person. The government will come and pick the microphone. And you'll be seated where you are sitting. The bank CEOs mostly will be in that table. Maiga and your team will be here. because you must be in the front row to get the message correctly. Insurance companies will be there where there is microphones. And all of us as Kenyans will also be listening. Maybe the hall will be too small for all of us. Others will be out just listening. Hii mkutano ni ya nini? Then the program will start running like today. Let's have some brief remarks from the CEO of the group NMG. And after that, the main speaker, who is the government. The government will take the mic and tell you, good evening. It will be an evening that time most likely. Because mornings are not made for those kind of news. Then they will come and tell you, I know and I agree. You are a good Kenyan. You gave me 1 million shillings last month because you bought treasury boards. And I'm very grateful because we were able to pay some recurrent expenditure which were really pressing us. And then the government will go ahead and tell you, you know, Kenya is for all of us. We all belong here. We are Kenyan and we are patriotic. And I want to commend you for your patriotism. And it's because of that patriotism, I come to request you, our debt is 13 trillion and 60% I owe it to you. But out of the interest rate I'm paying of 1.25, only 0.25 I am paying to external. Because external debt is always cheaper. That's why you see 40% of our debt is only accruing to 50 billion of interest. But 60% of our debt is accruing a trillion in interest. So the government will now tell you, because wale wengine, sinajua ni external people. Now hawatusikizi, they are hard. They are hardicors. They are not listening to us. So let's leave them. We pay them their 250 billion every year. And that's the reason I called you as Kenyans. Let's see what we can do about this 1 trillion. Because there are some roads going to your home, and there is a school we went to for primary school. There is something we are doing about those two things. That's why we are requesting. We know for sure we owe you 1 million shillings. But because I'm the sovereign, on this Tuesday evening, we have just decided from our meeting as the government that out of this 1 million, we owe you 700,000. Then you start tapping your neighbor. Did you hear? Then the government will tell you, yes, I am very happy for your patriotism. Out of 1 million shillings, from today I owe you 700,000. In barber shop and salon language, we call that a haircut. And then they'll tell you, we know we also owe you to pay you next 6 months some money. We are requesting for the next 2 years, you may not hear from us. But immediately after 2 years, you start hearing from us. So you remember the board you bought for 10 years? We have just made it 12 years. Only that for these 2 years in front of us here, don't wait to hear from us. Thank you for your attention to this matter. See you another day. Signed, the government. I know that sounds like a story. So after this, call your Ghanaian friend. And then make sure you call a pensioner who is also a Ghanaian. The ripple effect is that this money from financial institutions are deposits, which I have also lent to the bank as a deposit. I am not trying to paint a picture, but I would want all the experts here after we finish. Anyone with an answer to that, come and pick the mic. Tell me the alternative to that in the next in the next few years to come. Tell me. So we either change course as a country, or of these boards we are holding, they are not worth what we are holding. Because the other alternative is to print money. Then print money. It is the same scenario. It lowers the quality of your money. So let me go now to the optimistic side. Shares, boards. I almost made a very gross mistake. Shares and equities, whatever name you may pick from it. So why do I prefer this, me as an investor, other than all the others I've given? Again, because of time. Around this time in Kenya, I think I'm well positioned. Shares, of course, you start by looking global. When you look global, Dow Jones is over 50,000 now. Within Iran, not outside of Iran, within the Iran issue, Dow Jones are now over 50,000, the index. Almost touching the record high, which it touched earlier this year. If you look at all the other indices in the US, some by yesterday touched the all-time high. That's good, it's fine, because the stock market in the US always goes up. Forget about the bumps of recessions and hitting of the market. If you draw the graph, you smoothen it, it is upward all the time. Depends with what percentage. But that's not the point. So, the world has been expansionary during COVID time, then contractionary after COVID because of inflation. Before Iran, the world was expansionary. Expansionary meaning we were lowering interest rates everywhere. The last from before February, across the world, the Federal Reserves or the central banks were lowering interest rates, including ours, including the US, even with the push for more cuts by the executive there. Now, inflation has climbed. The only month we have measured very well after Iran, in Kenya, inflation is up. Inflation figures in Kenya will be coming out this weekend. Of course, you may expect something more than 7.5%. Most likely, definitely. So what does that mean when the next CBR is meeting? When the Federal Reserve meets in the US, the very best to accommodate the executive, the very best they can do is to sustain the rate. But that's not even feasible. The sensible thing is to raise. CBR is to raise. So we are back to contractionary. So we are back to contractionary, meaning interest rates will be going up. Revisit the issue of debt I talked about in your boards. Maybe now I pair 2 hints because you know what we have to kufanya more homework. So we have now started a journey of raising interest rates. So that's contractionary monetary policy. Even if I'm talking about shares, that point lift it, take it back to Ghana, and start now doing it. Actually, it's in the house. You go do your homework. With this raising of rates, with the other problem I described, then tell me where we are headed. And then tell me what you foresee in terms of subscriptions of bonds and bills in the next few weeks. Then you make your decision. Let me go back to the equities. So P/E ratio of the US market. Nimesema naenda hints because this fall is filled by people who should actually be holding the mic and me listening. So you are all well versed. P/E ratio in the US market is over 27. If you bought all the US companies. Johannesburg could be maybe over 15, the P/E ratio. Nigeria, maybe around 11. By the way, in this whole, do we all know what P/E ratio is? Because I think I'm assuming too much. We know, eh? You know, I may start talking Greek, then I'm talking to myself. If you bought this hotel today at 10 million shillings, and the annual revenue is 1 million net revenue, how long would it take you to recover your money? Talk to me, guys. 10 years. That's the P/E ratio. That's the P/E ratio. If I bought Absa, Kenya today, and their net revenue, if I bought Absa for 100 billion today, and their annual net revenue is 10 billion, how long would it take me using what is called trading PE, the most recent trading PE, ile iko washatagaza, tuseme ni 10. How long will it take me to recover my money that I invested in APSA? That's what is called PE, price over earning ratio, or market cap over net earnings. It will give you the same. If you bought all the companies listed in the US, their PE ratio is 27. It will take you 27 years. There are some that are low, but there are some that are people are buying future. Take Tesla. Tesla is over 200 PE ratio. Most tech companies have higher PE ratios because you are buying the future more than the present. JSC Johannesburg is around 17, maybe 15 to 17. Nigeria around 11. Kenya, the average PE ratio in the Kenyan companies is 5. So I'm starting here as a very patriotic Kenyan, that at the current moment, I don't know why I should not buy shares in Kenya, and I have no reason to buy in any other market, and I have actually no reason to care about what the government is doing, because some of the companies are too solid for any government to do anything. That's why, in this period, since you started hearing me talking about these issues, I don't know any market in the world better than a Kenyan market. None. I don't know any. And I'll give you homework. This is the last thing I'm doing, then I keep quiet. Take your phones, your smartphones. AI will do this for you. Namaliza sasa. Namaliza. Can I get volunteers, 4 of them, just 4, so that this presentation is not mine alone. Just 4. Hata tunamaliza. 4 people with phones to come. Yes, Masharia come. Yes, please come. Tukuje hapa. And ladies, 2 ladies now, 2 bars now. Kujeni. And as they come, my school of thought is this. I said, I have listened to so many things from morning. My school of thought is, Mimi, in terms of investing, I either invest to get rich or I don't invest. So I'm just saying, in the risk profile, don't grade me at the age of my father. My risk profile must be higher. So it's either I am putting in money, I get rich, or wacha nikae nayo. So if you start telling me you have $1 million, I put in somewhere to give me at the end of the year 20%. So I have $1 million, so give me 1.2 million. So I have 100,000. You are promising me after a year to give me 120,000. So what goes in my mind is this. So I already looked for the $1 million without knowing you. You are helping me make only 20,000. Then I don't need to know you. So my school of thought is that I put in $1 million, I talk about multiples, ama nikae nayo. Is that the investment changes my life, or I don't do it? Maybe it's about my age, maybe about my risk profile, maybe about my exposure to many instruments. I don't know the reason. Okay, there is a thin line between getting multiples. There is also the downside. But for me, I would rather handle that than handling at an assurance. Ati nimeweka, umeinvest $1 million, mtu anakupromise ati 200,000. How a person having $1 million, what will 200,000 do to you? It means if you are in a rental house, paying 100,000, somebody is telling you to move. So you know investment and money should, in quotes, make our standards of life higher. So let's take where you live as the standard of life. So you pay 50,000. Somebody is telling you to work so hard by investing so that you move from a house of 50,000 to one of 60,000. What is the difference between a house of 50,000 and 60,000? You not even move the estate. Even the flat, your next door neighbor will be paying 60,000. Actually, when you move and return in the same house, you realize they were waiting for you to move so that they increase the rent. So it's not changing your life. So it's either you are moving from a house you are paying 50,000 to 150, ama ukae ile iko, ujipange vizuri. That's my investment reasoning. Take your phone. You'll do for me Standard Chartered Bank. Whatever thing I'm going to ask, Standard Chartered Bank. My brother will do for me Equity Bank. My brother will do for me, let me diversify from banking. I'm looking for listed companies. Do for me Car and General. Car and General. Have you ever heard of Car and General? Yes. Very good. There is a talk I had in the UK earlier this year. Then somebody asked, if you had 20 million, where would you invest? Then I mentioned Car and General that time. It was earlier in the year. Then I saw people looking at each other. That time it was 45 shillings in the market. I don't know what it is now, you'll check. You'll do for me, Kenya Power. Now, AI will do for you, so you just go. Don't even do anything. I want you to check for me, what is the PE ratio of all those companies I mentioned, according to the one you are handling. What is the PE ratio of? Then you look at the company we talked about. We'll be starting here. So that, okay, go to AI itakupea. What is the PE ratio of Standard Chartered Kenya? Remember to put Kenya because Standard Chartered is global. Oh. Yes, maybe that's why it's confusing you. This is important. I know you know it's important, the people in this hall. Because it summarizes a lot of things. To me, as an individual investor, P ratio summarizes a lot of information about the company. And the beauty, it does not communicate to me the hope. It communicates to me the current situation. Can we start? Inakuletea shida? Let's start from here. And you mentioned the company because I'm writing, and you write the P, and you mentioned the P ratio.
It's saying between 2021 to 2025, the ratio is 10%.
It's 10. Actually, it's not percent. P measures periods. 10. P measures years. I hope you understand, but you got it right. It's close to there, I think.
For Standard Chartered.
Standard Chartered Kenya. Yes. Let's go.
So it says the current price to earnings ratio for equity group holdings is approximately 3.8.
I know you think he's wrong, but he's not wrong. It is true. Because you have a company, is now valued in the market at 270 approximately billion, and they are making 75.5 billion in net profits. Without accounting for, using the first quarter, they've already started again reporting increment in profits. So I'm actually using trading P. I'm using trading P. If I use forward P, let's go.
Yeah. Kind general P ratio 2.6.
I also think most of you think he's wrong. He's not. A company valued at 6 billion, and they reported, I think, over 2 billion in net profit. You are buying a flat. In the case of equity, you are buying a flat for 27 million shillings. But the net, after umelipa caretaker, the net rent per year is 7.5 million. That's the case of equity. I'm just removed the zeros. Let me repeat. You are going to take 3.7 years to recover your money using trading PE. Let's go to the last one.
KPLC, Kenya Power, trailing PE is 1.45.
I think you can clap for the lady, even for saying that. Even for saying that. No, good Kenyans. Let's be actual here as Kenyans. Just tell me, you have 10 million. Why would you invest in any other thing other than this? Just tell me. Especially when you are dealing with banks, and this is my last thing. Sorry you gave me the mic to talk about investments, but I assure you this is the last thing I'm saying. Local banks, when you are evaluating banks, also use something called price to book value. You'll get some things there that are just obnoxiously exciting to an investor. So I'm going to redo to you now. Do stand chart. I want to show you a difference between our local banks and international banks operating in Kenya. There is something very clear on how they behave or how our market prices them. And then we can discuss about the reason why. Stand chart. Deal with Stanbic. Stanbic is a South African bank. It is a standard bank. Then my brother, deal with Equity Bank or KCB, any that you like of the two. Deal so that because Nation Media Group hosted us and their former dominant shareholder was Aga Khan, let's use DTB because it's their sister company. So all of you now, Google this from the companies that I gave you. All are banks. Because beyond PE, for banks, I also apply this as a tool. Price to book means there is the price of the price, meaning if I'm to buy this bank today, what is the price I would pay? That is the price. Book means what is the actual value of the bank. Actual meaning, the core capital of a bank in Kenya is $1 billion. So we have a fresh new bank today. So the core capital is $1 billion. That's the book value. The price value is, yes, it's valued at $1 billion. If somebody offers to buy us, what are they offering? So if they offer anything below the $1 billion, and we accept to sell to them, it means we are selling to them at a discount. If we mean to sell to them at a higher price than $1 billion, it means we are selling to them at a premium. So if we sell to them at $1 billion, it means no premium and no discount. So the price to book will be 1. So the starting point is 1. If the price is equal to book value, then you've bought it as a fair price, no discount, no premium. Hakuna mtu ameumia. Wakuuza ameuza vile ilikuwa. Wakununua vile ilikuwa. So tuko sawa. So let's now check in our own markets now. The same companies that I gave you, check what's the price to book value of the companies I talked about. And they are all banks. We start with Stand Chart because we will start with these two because they are not Kenyan. Then you see. They are Kenyan, yes, but the parent company is not Kenyan.
For Standard Chartered, the price to book ratio is 2.7.
That's AI. I think the actual one is 2. The very actual. Anyone with a... If you do... Oh! They actually announced a drop in profit. That's why. Maybe. It used to be 2. Who can volunteer what that means? The price to book value standard is 2. What does that mean? Somebody just lift up your hand where you are. It is 2. What does that mean? Price, what you are buying, over what the actual value is 2. Yes? Please say your name and the company. You must be working for a very good company. Mainga, that must be your employee. How politicians do things. When they hear it was this, I knew. Yes, repeat so that we all hear, because that's the correct answer.
So what it means is that when you pay two times book value, the price you're paying in the market is twice the value of everything. If you were to sell that company, everything out, you're paying twice that value. So you find a high price to book, then you're paying a very high, it's expensive. If it is below 1, it means you're buying a discount. So Stanchart is looking expensive.
Premium. Use the name
It's
premium.
a premium.
Premium of what percent?
200%.
Very good. Excellent.
Stanbic Holdings PLC currently has a price to book ratio of approximately 1.36.
Tell us what you understand with that.
Putting me on the spot. Okay.
Or
Essentially, I take it means that if I was to offer to buy it, I'd pay a premium.
of
Yeah, of around 30%.
36%. We have now all understood that. Now hear these ones now. Check.
I did both with the KCB and equity.
Yes.
They're all at a discount. So KCB, let's say the equity is 0.85, which means the value of equity in terms of assets and what you're buying on the stock price, the assets are more than the price because you're buying at a discount. KCB has
discount of what percent?
15%.
Precisely. These are actually not assets. These are shareholders' funds.
Yeah.
You know, in a bank is an intermediary. Shareholders' funds is the money where if you give your deposits and you pay us your loans and you account for NPLs, what remains on the table. Those are the shareholders' funds. Real money. KCB.
And KCB is 0.65, so it's nearly half. It's near 35% discount.
And remember, AI is using full year, last year financials. Here, our sister company, Diamond Trust Bank.
Wow. Diamond Trust Bank, the price to book ratio is hovering between 0.36 to 0.44.
I know by the look of your eyes you think she's wrong. But it is you who is wrong. She's actually right. Anyone who volunteered to tell us what that means? A volunteer, tell us what that means. Not the people on the stage. The people, all of us. Tell us. You just took lunch.
That means you're paying 40% of the value.
Can you imagine that? So, somebody would argue, why these two? Our market has a gap of information. So what do? We are totally a dividend-driven market. We don't even care anything else. A current investor in the NSC picks the dividend times 10 and gives their age. Their price is usually times 10 to 12. They close the chapter. Oh, I'm at 10 shillings. That share should be hovering around 120 shillings. That's the reasoning of the current market. That's why these two banks, they declare more dividends. Because it's not their business to export to DRC. It is Standard Bank of South Africa that should export to DRC, not Stanbic Kenya. So when Oigara makes profits, he declares almost everything to everyone. Because the most expansion he can do is to open a branch within Kenya, not to go to Uganda. It is the parent company to do that. The same with Stanchart.